Your portfolio hasn't moved. You're panicking anyway. What is that costing you? Right now, as I record this, the S&P is down 0.05%. The Nasdaq down less than 0.25%. The Dow barely moved. These aren't losses. They're rounding errors. Yet the VIX, the market's fear gauge, sits at 18.41, elevated. Anxious. Investors are stressed about market movements that don't actually exist. You felt this. The markets are flat, your holdings are stable, nothing material has changed in your positions or your thesis, yet you've checked your portfolio 7 times today. Your chest is tight. Your mind is spinning scenarios. You're suffering through a crisis that hasn't happened, might not happen, and even if it did happen, wouldn't matter to your 20-year time horizon. Epictetus called this fantasia, the false impression that disturbs the mind. He said, "We are not disturbed by events themselves, but by our opinions about events." 2,000 years before the invention of the stock market, he identified the exact problem destroying your returns today. You think the anxiety comes from market volatility. It doesn't. The anxiety comes from the gap between what you can control and what you're trying to control. Let me make this problem bigger than you realize. It's not just the stress. It's not just the sleep you're losing or the attention you can't give your family because you're refreshing market data. Those are symptoms. The actual cost is mathematical, and it's brutal. Every time you act on that anxiety, you lock in the very losses you're trying to avoid. You sell when you should hold. You abandon strategy for relief. You trade away long-term compounding for short-term emotional comfort. Studies show anxious investors underperform the market by 3 to 6% annually, not because they pick the wrong stocks, but because they can't sit still with the right ones. And here's what makes it worse. The anxiety doesn't correlate with actual risk. Today proves it. Markets down less than 0.25% across all major indices. Crypto showing mixed signals, but nothing catastrophic. Bitcoin up, Solana slightly down. Normal market breathing. Yet anxiety is elevated. You're suffering before it's necessary. You're in pain about movements that don't warrant pain. Epictetus would say you've handed control of your mind to numbers on a screen that have no power over you unless you grant it. The Stoics had a name for this. Premeditatio malorum. Premeditated suffering. You're living through losses that haven't occurred, preparing for disasters that may never come, experiencing the emotional cost of a bear market during what is functionally a flat day. You're paying the full price of catastrophe while receiving none of the discounts that actual catastrophes create. Let me show you what this looks like in real life. Let me introduce you to 2 investors who both watched the same screen but see completely different realities. Marcus Sterling has been investing for 32 years. Silver hair, steel blue eyes, hands that have signed trade tickets through 3 recessions and 2 market crashes. He sits in a leather chair in his home office, morning light filtering through plantation shutters. His portfolio is open on his desktop monitor. Red numbers. Not catastrophic red, just the dull red of a market that's slightly down. 0.05% on the S&P. 0.24 on the Nasdaq. He registers the numbers the way you'd register the temperature. Information, not identity. Across town, Alex Chen, smart glasses perched on his nose, checks his phone for the 14th time before 10 a.m. Same portfolio, same red numbers, but Alex's body doesn't register information. It registers threat. His heart rate climbs. His breathing shallows. The stress lines around his eyes deepen. He opens his brokerage app, scrolls to his positions, sees his tech holdings down slightly, sees Bitcoin up but remembers it was higher yesterday, sees the VIX elevated, reads 3 headlines about potential Fed policy shifts, and his mind begins catastrophizing. What if this is the start of something bigger? What if I should have sold last week? What if I'm about to watch gains evaporate? Here's what Marcus does. He closes the portfolio screen, not because he's afraid to look, but because he's already looked. He has a rule, anchored in Epictetus: I control my decisions, not outcomes. He opens a document titled Investment Thesis, written 6 months ago when he bought these positions. He rereads his reasoning. The fundamental analysis. The 20-year time horizon. The acceptable volatility range. Then he asks one question. Has anything in my thesis changed? Revenue projections for his holdings? Management quality? Competitive moat? Market position? The answer is no. The companies are the same. The strategy is the same. The only thing that's changed is the price, and price is the one variable he doesn't control. Epictetus whispered this truth to every Stoic who would listen. Distinguish between what is yours and what belongs to others, and you will never be disturbed. The stock price belongs to the market. The decision to hold or sell belongs to Marcus. He doesn't feel calm because he's suppressing anxiety. He feels calm because he's directing his attention to the right target. He checks his calendar. His next portfolio review is scheduled for 3 months from now, part of his quarterly rebalancing discipline. Until then, the market can do whatever it wants. He closes his laptop. He goes for a walk. Meanwhile, Alex is on his phone reading analyst opinions about whether today's slight dip signals a trend reversal. He finds 12 different opinions. 6 bullish, 6 bearish, all confident, all contradictory. His anxiety compounds. He's not gathering information anymore. He's gathering permission to act, to do something, anything that will relieve the tension. The Stoics called this assent. You give assent to an impression, and it becomes belief. And belief becomes action. Alex is about to give assent to the impression that he must act, but something stops him. Last week, he started reading Epictetus. One line keeps surfacing in his mind. It's not what happens to you, but how you react to it that matters. He recognizes, just barely, that the discomfort he feels isn't coming from the market. It's coming from the gap between what he wants to control and what he actually controls. He wants the market to go up. He wants certainty. He wants validation that his positions were right. None of those wants are within his control. He does something he's never done before. He puts the phone face down on his desk. He takes 3 deep breaths, the way Marcus taught him last month. Then he asks Marcus's question. Has my thesis changed? He opens his notes, rereads why he bought these positions, reminds himself of his 10-year horizon. The answer is no. Nothing material has changed. He doesn't feel calm yet. The anxiety is still there, buzzing like static. But he doesn't act on it. And in that moment, he experiences something radical. The feeling of anxiety and the compulsion to act are not the same thing. He can feel one without doing the other. The market closes that day down 0.1%. Alex's portfolio is functionally unchanged. But Alex has changed. He's discovered the gap. The feeling reality gap, the distance between what he feels is happening and what is actually happening. That gap is where fortunes are lost. And closing that gap is where Stoic investing begins. So here's your one action. The next time you feel the urge to check your portfolio driven not by your schedule but by anxiety, stop. Ask one question out loud. Has my thesis changed? Not has the price changed. Has the reason I bought this position fundamentally altered? If the answer is no, close the app. Walk away. You've just practiced the most profitable discipline in investing. The ability to do nothing when nothing is required. Most investors already know this is happening. Do you?